the bulletin board heroes here at Zach's Traders Cafe for Thursday, the 28th of December. Starting off with the FTSE 100, which has become rather marooned above the old resistance there from October, around 76.80, but below our 78.10 resistance line target from back in May. Obviously, we're hoping for 78.10 or 20 by the end of tomorrow, which looks a bit optimistic at the moment because that would be the last day of the year. Above 78.20, looking for up to 80.60 by the end of next month as a best case scenario. Otherwise, we will have to test for support at that broken February support line, which has now become a support line, was old resistance line there at 76.30, but just looking suspiciously calm there at the moment. Moving along to the DAX, which is still in consolidation mode, above the old 16,500 peak from the end of July, but below our recent target at 16,900. We want to see a break of 16,900 to give us a fresh leg to the upside towards 18,000 by the end of next month, although at the moment it looks a little bit optimistic. On the downside, the worst case would be a test of support towards 16,100, the old August-September resistance. Remember that we are in the aftermath of a golden cross earlier this week between the 50 and 200-day lines. Moving along to the Dow, and this is the star of the show at the moment, given the way that we're in this rising trend channel from the beginning of October. The best case scenario target we had for the end of next month was actually 37,900, and we're very close to that at the moment. Above that, looking for up to 39,300 at the top of that October trend channel. The worst at the moment, hopefully, on the right side of 37,000. Moving on to Bitcoin, which is congested at the higher levels, which I suppose is a good thing. But here we've got that rising trend channel from October, looking suspiciously like the rising trend channel on the Dow chart. Here, though, we'll probably, to be safe, need to see 44,000 plus to give us 50,000 by the end of next month. Otherwise, it may be a test of the 50-day line, currently just on the 40,000 mark, that we have to see before the market is able to kick higher for another leg. Onto a stock which is very closely related to the Bitcoin situation, Argo Blockchain. In fact, it should be called Argo Bitcoin. Here, the shares have tripled over the course of the month, and you saw it here first. Probably nowhere else either, actually. We had our targets initially around 12 pence, then up to 19, then 24, and then the final one, possibly, is the old support for the shares around 33 pence. That's also the gap down that we had back in October 2022. So looking at 33 pence, maybe 34 pence as a best case at the moment. Ideally, we stay on the right side of yesterday's resistance at 27 pence in the meantime. So let's see if Argo can step up to the plate. Obviously, this week we've had a golden cross between the 50 and 200-day moving averages. And as I normally say, the run-up to that tends to be the strongest part of the cycle, which has worked on this occasion. On to that hotbed of liquidity, otherwise known as the Aquis market, a couple of stocks from there. First one is Coinsilium, which is, I think, for the first time in a long time, actually looking like a stock which is meaning business. The last time it was in this kind of mode was at the beginning of 2021 when we had that liquidity bubble due to the pandemic. Current situation is that we're looking for the shares to head up to 2.4 pence as soon as the end of next month, especially while they remain above the old resistance there from back in June around 1.7. So above 1.7, looking for 2.4 on Coinsilium. Obviously, the rise in the recent past for CTA gives us a chance to look at it. CT Automotive, here we've already seen the shares hit our initial target there around 68 pence. That comes after a bear trap island reversal, so that's an island reversal which goes to new lows and then gaps up. That's what we had from April through September this year. Above 68, looking for as much as 95 pence, and that might happen as soon as the end of next month. Upside valid while we hold above the 60 area, which is the 50-day moving average. Corcel has been a reasonably well-behaved situation over the recent past. We did have September through to the early part of, well, basically this week as a rather volatile period, but the shares now re-established within that rising May trend channel from the what's it called, the 0.4 pence area, and looking for 0.8 pence over the next couple of weeks, which is the top of that rising trend channel from the early part of the year. If you're a fan of the shares and looking for greater glories, they may come in the form of the line I'm about to draw now, which is back from February, and that's heading towards the 1 pence zone. So maybe that is a target, as a best case target, for the end of next month or going into February. Upside value, but certainly while we're above the 0.6 pence level. Moving on to Greatland, which one would assume will get some benefit from the recent rise in gold. Here, what we're looking for is an end-of-day close above, back above a rising 50-day moving average, a sharply rising 50-day line at 9.3 pence. If we can get that, then it could be the setup that gives us a target as high as 12.5 pence by the end of next month, which is the top of that broadening triangle from the beginning of November. Good sign that we bounced to old resistance and above the now rising 200-day moving average. On to Invinity, which one looks at with a bit of trepidation, but has to be said, the recent, well, at least the last week or so, has been a good period for the shares. Looking for the shares to basically fill the gap up to the 40 pence area by the end of next month. If you're cautious, which quite a few people might be after the recent performance and the new lows that we had earlier this month, then you'd wait for an end-of-day close above the 50-day line and 34 pence before assuming 40 pence is on its way. The other Aquis stock, which we're looking at today, is KRON, which has just broken into new territory as I speak, new near-term territory, that is. Here we were looking for up to £1.20, now in this case by the end of next month, while we hold above the initial target here around the 76 pence area. So above 76, looking for 120. If you want a tighter money management stop, then probably at this stage just below 90 pence would do the trick, and that makes sense on a risk-reward basis as well. Kromek is next, and it sort of fits the bill in terms of trying to find shares a little, well, as early as possible before their big rally. Here we've got a rising 50-day line, which is near the lows, and the shares have broken through that, so that does suggest we've got a strong technical setup here above that 50-day line around 4.5 pence, looking for up to 8 pence by the end of next month. If you're cautious, then you'd wait for an end-of-day close back above the 200-day line and that resistance line there from April at 5.1 pence before assuming 7.5 to 8 pence is on its way. But it'll be interesting to see whether that rising 50-day line is a leading indicator, as moving averages are not usually in that bracket. On to Longboat, which is a very similar setup, actually maybe arguably an even better one than Invinity, in the sense that we've had a bear trap from below a rising 50-day line, so we've closed above that, and we've also got a rising 200-day moving average, which suggests that we're going to go for a golden cross in the next 2 or 3 weeks and run up to a golden cross. As I said, with Argo, it tends to be the strongest part in the cycle, so that gives us the potential of having a target near to 40 pence as soon as the end of next month. If you're cautious, you wait for an end-of-day close back above that old November peak at 21.25 pence, but that may not be needed. Only back below 16 pence now, delaying the upside or recovery argument there. Didn't think I'd be looking at Peel Hunt anytime soon, but shares have actually done very well since the beginning of last month. Maybe there's a bull market on the way. We've got a bull flag breakout, V-shaped bull flag breakout, mini bull flag, which tends to be very strong, and above 107 on an end-of-day close basis, looking for up to £1.40 by the end of next month within that wide broadening triangle from the beginning of the year. Stock which I didn't cover this morning, which maybe I should have, is coming up next, a contract win for Regtech. Here we've got a situation where it has been very volatile, and one does get the feeling that there are shorters in place here. There's people who sell into strength. You see that from the long-wicked candles that we had at the end of November and also over the last week or so. But to counteract that, we've had a bounce off the floor of that rising trend channel from the end of November. Very strong hammer candle, and we gapped up. So that's a bear trap island reversal, just on the basis of those few sessions. And at least while we're above the 50-day line at 11.75, we could see at least a push towards 20 pence again. Although, as I said, just looks as though the shares are or have been sold into strength. If you're cautious, which you probably would be, then a break of the RSI back above neutral 50 would help. But the overall pattern here, if you found the shares, is above 9p. There is the possibility of a move to the top of the rising trend channel from November as high as 27 pence. But obviously, we need to stay above 9 pence. Very pleased to see sovereign metals make a jump towards the end of this year. Here we've had, as suspected, a push back towards the upper 20s, 29 pence, the top of that falling trend channel from the beginning of the year. The secret here was the gap close buy signal and the bear trap from below the November support there at 22 pence. Also got the 50-day line sharply rising, which is a good signal. We're waiting for a break, finally a break of that February resistance line at 29 pence or 29.5 pence above that. Looking for at least 36 pence by the end of next month, and then hopefully the shares can relive some of their glories from the beginning of beginning of last year when they spiked near the 50 pence level. Moving on to Tirupati, which put out quite a solid sounding RNS today. Brave talk there from the company. And here we've got the shares breaking a line of resistance there from November, around 15 pence above that, looking for an initial 20 pence over the next 2 to 3 weeks, hopefully a bit sooner than that. There is an uptrend line in the RSI window, which should also help the case. And the other point to note is support recently has come in above the floor of that gap from October, which is a failed gap fill, which tends to be a bullish signal as well. Let's see if that delivers. Moving on to another broker, WH Ireland. What a year it's been for them, and you can see the massive gap to the downside. But with trepidation, one's seeing potential of a broadening triangle base here above the 50-day moving average, and only above the 50-day moving average at 4.2 pence. We're looking for up to 9 pence at the top of that triangle from back in July. On to the last three. First one is Wildcat, which once again has given us price action, which merits it being in the bulletin board heroes. Here we've broken above the top of that gap there at 0.32. We were looking for an end of day close above that to give us up to 0.44 by the end of next month, the way things are going. Maybe a bit sooner than that, but 0.44 over the near term there. Ideally, we stay on the right side of that old peak at 0.28 from last month. On to Zanaga, which also had an RNS today, which I managed not to cover. Here we've had an unfilled gap to the upside. We've broken the 10 pence level, which was an initial target here. Above that, looking for the top of that gap down from back in July at 13 pence, and hopefully we'll have that over the next week or two. Obviously, the longer we stay above 10 pence, the greater the chance of a retest of the June resistance at 18 pence, maybe for as soon as the end of next month. Finishing off with a requested stock, one I interviewed a couple of weeks ago, Pulsar Helium, and the novelty here is the prospect of the company actually finding helium next month, unlike some other companies, and also the fact that we have got a rising trend channel here, and the shares have bounced off that rising trend channel from back in November. Top of that channel heading for as high as 0.53, and we can see that by the end of next month, which obviously ties in with the drilling that the company will be doing. Obviously, this is a Canadian TSXV stock, just in case you're looking for it on AIM or Aquis or anywhere else. That's it from me today. More updates tomorrow.